Welcome and thank you for joining us today. Craig Huey is publisher of the industry newsletter Direct Marketing Update and president of Creative Direct Marketing Group, Incorporated, a full-service direct response advertising agency. He is the author of several books, including his latest called 16 Secrets to Raising Capital from Crowdfunding under the Jobs Act. Craig has the distinction of being recognized as one of the nation's top direct response marketing experts. His insightful and on-target strategies have generated more investment leads and sales than anyone else in the industry, including helping companies raise over $1 billion in assets. Over the years, CDMG's marketing programs have garnered 86 major industry awards. Caleb Huey is Vice President of Creative Strategy. For over 10 years, he has been on TV, spoken at conferences, and helped provide investment marketers with new ways to expand and grow. Craig and Caleb have made millionaires out of entrepreneurs and helped grow million-dollar organizations to even higher levels of success. Take it away, Craig and Caleb.
Hey, thanks, Anthony. Really appreciate it. And we're going
Thanks,
to
Anthony.
so much material, so many things to cover. We're going to be quick, action-packed, concise, and I want you to know that during this webinar, we're going to cover everything you need to know about crowdfunding and marketing to the investors. Caleb, you want to explain about the questions and the format?
Of course. If you haven't, there's a chat feature on the right. Feel free to ask and type away. Back to you as soon as we get some of those questions live here on the webinar. As you can see, we have 28 things to go through, so there's a lot of material for us to cover. So let's get started.
Yeah, that's great, because really what we're talking about here is absolutely amazing. For the first time in 80 years, this revolutionary way of being able to go directly to the investors. And so we want to know what the Jobs Act is, how do you use it, how do you reach the best investors, what's the best way, and we're going to cover all of that. And there's really 4 ways to raise funds. Caleb, do you want to explain those 4 ways?
Yeah, the advertising directly to the investor is what we're going to focus on today, because that's what we do. That's what we do very well. When you advertise an offering directly to an investor, you articulate your company, why they should be interested in your industry and your sector, and why specifically you are a company that's poised to be a major player and a major force in that sector. You can also work with a crowdfunding platform. Those are websites that host these offerings online. Investors can invest in these different offerings online, and they end up generating large lists of investors, and they can promote these deals to that list of investors. Broker dealers will take they'll do their due diligence on your deal to make sure that they like the deal. They have a lot of compliance that and they'll take a per capital vulture and much of your percent of your and doesn't want to combination of be a venture funded company with a broker dealer listed on a platform and still advertise to additional investors to generate more traffic, more investment into your company. So none of these are mutually exclusive, but they are all methods independent of themselves and in combination with each other.
So what we need to then know is the whole thing with the Jobs Act. I called it revolutionary because what happens with the Jobs Act is that with equity, crowdfunding, debt crowdfunding, it opens up a whole window of opportunity for public companies to generate private capital, for private companies to become public faster and cheaper, to raise funds and maybe never even becoming public. And it enables investment funds and hedge funds to raise capital as well. So we were working with companies in all these different categories, and it's an absolute revolution. And there's 3 powerful new ways that you can market directly to an investor. So I want to just pause before we get into the tactics and the strategies to talk about the 3 options that you have. Caleb, you want to explain about these 3 options?
Of course. The first provision of the Jobs Act is the Regulation D 506C, and that limits us to accredited investors. Accredited investors are individuals that um, have a high net worth. They're worth over $1 million in assets, excluding their primary home. They make over $200,000. It's the 1% of the population. After that provision was passed, the Regulation A plus was passed to take on non-accredited investors. You have a cap of $50 million that you can raise under the Regulation A plus. It is a bit more expensive to move forward with the Reg A plus filing, but being able to take on a larger group of investors at a smaller amount of investment capital per investor can raise you more money. And it also helps prep a company if they're looking to go public. And the most recent filing is the Reg CF. That allows a company to raise up to $1 million, but there are limitations on their marketing. So there's some pros and there are cons for each filing, and knowing which one's most appropriate for you is very important.
Right. And so we're going to be really concentrating on Reg A plus and 506C. That's going to be the main focus that we have, because that has the greatest opportunity for you to be successful. Now, for CF, if you're trying to raise under $1 million, you can be successful by going on the platforms. There's, for example, Beta Bionics, which is a pancreas biotech company out of Boston. And they raised $1 million with WeFunder. Brewer's Table, $396,000 with Next Seed. We've seen Legend M Entertainment raise $1 million through WeFunder. Usually with the CF platforms, you're going to have to give up about 3 to 12%. There's other platforms. There's Angel List and Circle Up for accredited investors that work well with 506C. There's Republic, WeFunder, Indigo, Fig are open to everyone, and that's something new. Also, CrowdVest. So here's the thing: you can be part of a crowdfunding platform, or you don't have to be. But either case, you can go directly to the investors with an integrated marketing campaign. You know, if people don't know who you are, they don't know why they should invest, there's only one thing you can do is market and advertise. In fact, when you market and advertise, you want to, number one, go only to the most active investors in America that are likely to invest in your project. And then number two, you got to have the best marketing strategy and tactics implemented. So that's what we're going to be taking a look at. And what happens when you have success? Well, take a look at just a few of these companies. Caleb, you want to go over these real briefly?
Yeah, sorry, the slide hasn't moved forward, so I don't have that slide up.
Okay, Elio, you want to explain about Elio?
Oh yeah, of course. Elio Motors was one of the first big success stories in the crowdfunding space, in the Regulation A plus space specifically. They were able to raise $17 million from the crowd, and they did go public thereafter, and their market cap shot up to over $1 billion. So the valuation shot up over to over $1 billion. They listed on the OTC markets. It's a pre-revenue startup car company. Now, since then, we've had some other success stories. Just about a month ago, 3 companies went public on the larger exchanges, NASDAQ and New York Stock Exchange. There was Atamani, which raised capital, millions of dollars in investment capital, went public on NASDAQ, and again, shot up to over $1 billion market cap, or $1 billion valuation. Myomo, which went public on the New York Stock Exchange, MKT, and is sitting at about a 50 million market cap today. And Shift Pixie, which I believe is sitting around a $300 million market cap today. So these are big success stories. They were all able to qualify for the larger exchanges, which means they all raised over $5 million in shareholder equity, and they were able to get some institutions on board as well.
Now, this is just a handful, and there's a few hundred companies right now registered with the SEC for Reg A Plus that can go to any investor. And then we've got so many companies doing 506C who are marketing just to the accredited investor. And one of the things that you see on here is the idea of the pre-IPO. Now, some companies want to generate capital for whatever use they want, maybe to expansion, for marketing, for just new projects and research and development. You can do anything you want with that money. Some companies just want to stay private with it. Others have the vision of going on the big board, and we're calling that a pre-IPO. Because what it does, it fast tracks your way to becoming public. It enables you to be able to gain those shareholders and get all the different things done where you're saving time and money in becoming public. And it's probably one of the smartest ways to become public today. Now, Caleb?
I will say that not every company that is moving forward with one of these capital raises wants to go public. And you don't need to go public. So, for instance, the 506C, you simply draft a private placement memorandum and you file it as a Regulation D 506C. The Reg A Plus, there is a longer process in getting approved by the SEC versus simply filing your paperwork as a Reg D 506C. So just to clarify, not all of the companies that move forward with this are intending to go public, and not all of them need to register with the SEC with the same kind of filing.
Exactly, and I hope that answers Paul's question about that. Paul is one of the people participating all over the United States right now in this webinar, and he wanted to know about the SEC and having to register. So hopefully that helps, and Caleb can give you specific on the road. So what we want to do now is talk about marketing and advertising, the three key principles. The first principle is don't waste time, and 2, don't waste money, and 3, don't do anything that's not accountable. And of course, if you're 506C, make sure that you're only going to the accredited investor. So what are the secrets to making a success? I think the fundamental one is the secret of scientific advertising. What it is this. Most ad agencies and most companies' marketing departments do image advertising versus direct response advertising, which is often called scientific advertising. It's highly targeted. It's just going to the most active investors that we identify. And often we'll use a multimedia integrated approach where we always know the cost per lead and the cost per sale and the lifetime value. And we take a look at your positioning and your image and look at your unique selling proposition. What makes you different for an investor that they'd be attracted to what you're doing? So we take a look at that. And then we create what we call crowdfunding on steroids. This is where we use modeling and optimized data, and we send the direct mail piece out to the active investor we've identified most likely to invest in your company. But we also have banner ads going to them, just the same person that's getting the direct mail. We have email only going to the people getting the direct mail. We have pre-roll commercials only going to the people getting the direct mail. We have Facebook newsfeed ads only going to the people who are getting the direct mail. It's all to the same names. And it's a powerful way to lift response and be able to get the shareholders in that investment capital that you want to do. So this new integrated multi-channel campaign, you can see one of the campaigns we worked on. It's got a multitude of different types of tactics going on to the very same people, and it produces really amazing results. So with that, we also want to be able to have what we call a lookalike audience. So I'm going to talk a little bit about data modeling and lookalike audiences. We have mailed over 1 billion pieces. We do so much on Facebook and on Google, and knowing how to get to the right investor and how to be able to identify them. So what we've learned, we take and we apply it to finding shareholders on the Jobs Act. And Caleb, do you want to explain about this lookalike audience that is such a breakthrough for marketing?
Yeah, a lookalike audience is a simple concept where if you have a group of individuals as prospects or as customers, we can identify other individuals that have some kind of commonality or really a lookalike of your audience. In Facebook, for instance, when people are browsing Facebook in their news feed, they click on different articles. And if your customer base or your investor base is clicking a lot of financial articles, that's what they have in common. Facebook's algorithm will do a lookalike to identify other individuals that also click on that kind of information. And we can serve an ad to people that look like a certain audience. So the data that we already have in-house as an ad agency, we know who hasn't invested in different companies in the past that we've worked with. We can use that data. It's better if a company already has data for us to work with, because then it's custom tailored to your company. But we are able to leverage the assets that we've built for procuring a lookalike model.
I think one of the great things is understanding that these active investors are not just general investors. They have a proven track record of investing in small cap and startup companies, and the idea of being involved in an IPO for some of them. We identify all the particulars. If you got a company, for example, that is in the cosmetic area, we can identify investors that have that propensity towards liking that because of the advanced algorithms that Google and Facebook and TrueView have, and also the really incredible advanced behavioral scientists that modeling that goes on with direct mail. And Lisa, one of the people watching this webinar, asked the question: when we talk about going to these investors, is it just for Reg A Plus where we can go to everyone? Yes, it's for Reg A Plus where we can go to every investor. But she wants to know, can we go specifically to the accredited investor? And absolutely, for all these different categories, we can identify just the accredited investor. Caleb, would you kind of walk everybody through real quickly what happens with the direct mail, since that is often the most responsive and the one that produces the greatest number of shareholders among all the different options?
Of course. As I mentioned with the Facebook ads and a lookalike campaign to like-minded individuals, we can do the same thing with direct mail by sourcing a lookalike audience based on transactional information. So instead of finding other people that click on the same kind of information as your audience or your investor audience, if you will, we can take your audience or your shareholder list, find out what they have in common as far as their spending habits, their purchasing decisions, and mail a solicitation to people that look like your current investment base or a list of investors that you have or potential investors. In the example above, you can see that this person makes $350,000 a year. Their net worth is $5 million, and they are direct mail responsive. They've subscribed to travel magazines. They spend $150 on jeans. Every time a person makes a purchase, they're tagged as a buyer of that kind of thing. So when we have a list of potential prospects, we can identify what those prospects have in common based on those purchasing decisions. And again, find a lookalike list of people that look like that audience and mail to them. So it's a way that we're able to leverage an in-house list. And if you don't have one, like I said, we do have some data that we can provide. It's just best if it comes from you, because then it's more aligned with your company, your vertical, and investors that would be inclined to invest in you. Now, when you do a lookalike model, you end up getting a much higher response. You can see this example of non-modeled names versus modeled names. Every time we put together one of these lookalike lists, we get a higher response than conventional methods for renting investor lists.
And with these investor lists, again, we're going to the most active investors based upon transactional data. If they've invested with in Schwab, if they've invested in different types of private companies, the one question is, can we identify people interested in investment deals, real estate investment deals? Sure. We can see those who have the propensity to do that. So again, we're not talking about some broad category. That would be death in your marketing. What we're doing is we're talking about most active investors in America today. And once we identify that, then we put together the campaign. And the campaign's foundation is creating a direct response landing page for the campaign. We never have the potential investor go to your corporate site. That's anti-marketing. It'll distract and destroy a campaign. We have a specific landing page that's built around the marketing campaign that we're doing. And there's no navigational distractions. It's data collection. It drives the prospect to make an immediate decision. And when we do the landing page, we have to make sure that it's mobile optimized, because some 60 to 70% of your investors, including the accredited investor, is going to go to a mobile optimized landing page. Then within the landing page, we put in specific cookies. And it could be with Facebook, it could be with Google, and it's retargeting or remarketing. Caleb, you want to explain that strategy and how that works so well?
Yeah, retargeting is a simple way of reminding a prospect that you exist and that you're an attractive offer. So after somebody hits your landing page, a cookie is embedded in their web browser, and we can begin targeting them with banner ads that follow them from website to website. We can follow them with a Facebook ad, so every time they go to their Facebook, they see another ad in their newsfeed. We can follow them with pre-roll video. That would be a TV commercial online anytime they look at a video or a video content online. So if you've ever seen it, they make you sit through about a 30-second commercial before you can watch your video. So we target them pretty much everywhere they go online, and we can do that for 30 days or so while we're following up with them, and a salesperson or officer of the company can reach out to see if they are in fact interested in your offering.
And retargeting is an absolute must, because it brings back so many people. And we actually have different ads. We refer back to the fact they've been on the landing page. If they actually went to the section where they're ready to make a phone call or make an online request for your investment information, and they leave without doing so, we know that, and we have specific ads that follow them around on that. Huge response when we do that. And then, of course, there's video. We always want to incorporate video within the campaign on the landing page. It increases the banner ad response, increases the email response, increases the Facebook response, and of course we use it for pre-rolls as well. And Caleb, you want to explain the type of most powerful video that we use?
Yeah, counterintuitive to what we would think, a simple video outperforms a flashy or complex video. From everything that we know in direct response, it would make sense that a talking head or spokesperson would outpull just scrolling text with a voiceover, but that's not the case. The simple videos with plain text that scroll through with a narrator explaining the text and talking in verbatim, reading the text, seems to get about 15% better response. So we recommend everybody have some kind of video for their landing page. We always get a better response, and we can use that video with these pre-roll and.
All right, and then what we want to be able to do is have just a powerful campaign with Facebook. And Facebook is integral in a couple of ways. One is we have a custom list. In other words, we create the perfect lookalike investor, give it to Facebook, and Facebook then uses its advanced algorithms to duplicate them in an amazing way. We are able then to take our target audience, have ads specifically for them. So if we're doing a mailing campaign and we're doing an email campaign and a banner ad campaign, they're also seeing the Facebook ad on their newsfeed. Then the lookalike, somebody just like our custom list. Then we do the remarketing, and then we do the tap to call so that they can call you immediately. And then we do the lead ads. And lead ads, Facebook's always coming up with new techniques. This is where you find a good prospect, and Facebook will also fill out all the contact information so they don't even have to. And all they do is hit click. And it's a powerful way of doing it. Then we have banner ads. Caleb, you want to discuss the banner ads?
Yeah. Banner ads can be a powerful tool. They do get a lower response rate than Facebook ads, but after a prospect sees your offer, you can remind them with these informational style banner ads that follow them from website to website. So they've already read a little bit about you, and you're remarketing to them most of the time. Now, we always accompany banner ads with emails, Facebook ads, direct mail, what have you. So this message is really following them in every medium that where they're consuming information online. So when we integrate a campaign, we typically start with direct mail. So an audience of people receive that direct mail piece. We follow up with email. They see the same message in their inbox in their email. And then when they go online, whether they're reading the Wall Street Journal or Yahoo Finance, one of these banner ads is going to be there following them on every page that they're reading. They are, like I said, informational. You can see that they're long form copy. When we put an image of a video in the banner ad, they usually outpoll versus a static image. And when the prospect clicks on the banner ad, it takes them straight to the landing page that has more information for them, as well as the video that's promised.
And then we have email. And with email, basically prospecting emails to people that are just like our defined investor we've come up with. The integrated email is the one that's going just to the people we're mailing to and having banner ads and Facebook ads to. The conversion email, we'll talk, Caleb actually is going to be talking about that towards the end, where you've got the lead, now you've got to get them to invest. We like to put video on the email, and we like to test a variety of variables with that email. And one of the key things is we always make sure the email is relevant, reputable, and rewarding. There's value, so people will learn something every time they get it. With the email, it's really critical that you don't have an email that's simply selling your product. Now, I'm going to go back for a second because I think we missed one other thing that we've got to talk about for this program of maximizing your return with the investors. So let me go back here. Here we go. The Google TrueView and pre-rolls. You know, for clients over the years, I've produced over 300 videos and TV commercials, 13 infomercials. I love video. And what's happening now is, Caleb briefly mentioned it, is that when we create a video for marketing the Jobs Act, we create some that is designed to be put before somebody sees on Google, TrueView, on YouTube. They see your commercial. And we do that just to the people we're marketing to. We can do it with a lookalike audience, and we can do select cable. For example, with select cable, we can choose out going to Fox Business, to CNBC, to Bloomberg TV, and anybody that's watching a commercial from those cable companies, they'll see your commercial. And they could be the ones that are receiving the direct mail campaign, and it's very integrated and powerful. So what about direct mail? Direct mail is so powerful because the data is so good. That's what gives it a huge advantage. The data of the active investors is better on direct mail than you find on Facebook and Google and the rest. In fact, it gives those other media a head start, a supercharge to be successful. And with direct mail, we have traditional direct mail, magalogs, bookalogs, three-dimensional, and video logs. So let me explain what these different formats are, starting with the traditional direct mail package. So it's usually the core of the campaign. You can do a campaign just with email or just with Facebook, and we do that for clients. But given the choice, direct mail will give you a better return on your investment because of the data being so well defined. With this, an envelope mailing usually is a traditional envelope. Here's a couple of Job Act type campaigns. We'll have a lot of choices, and we've done over 1 billion direct mail mailings for clients over the years, so we know what works and what doesn't work. For example, just in the area of the type of postage you use, you got 3 choices. You can do the top one, that's called a printed indicia. The middle one's a pre-canceled stamp, and the bottom one, that's a metered envelope. It's all the same postage. It's a discount postage over first class. The middle one, the pre-canceled stamp, will give you 12% higher return over the top one and about 15% higher return over the bottom one. So it's little tactics like this that are important to be able to make sure that your campaign is working and working really well. In doing this, you want to be sure to have a brochure and a long letter in the envelope, not a short one. You can see the different response rates and the various options that you make. Now, in marketing, you always test. And over the years, we've tested to the investment many campaigns, many different styles. And what we have found is that the envelope mailing usually works best, but in many cases, the magalog works better. Now, the magalog, what that is, it looks like a magazine, feels like a magazine, but it's not a magazine. It's a sales piece. It's like an infomercial in print. This one happens to be for an investment fund, a private investment fund under the 506C. And the magalog is usually at least 16 pages long, often 20. And it's designed to get the investor to respond. And when you have a more complicated investment offer, when you've got a great story to tell, it's so much better than using an envelope mailing. Here's one where it's a mobile app, and we're testing investing alongside a shark versus mobile app growth explosion. Well, the winning cover was investing alongside a shark. We always test different things and different variables whenever we do any type of marketing, including direct mail. Another form of option is a newslog. We came up with the new magalog maybe 20 years ago, and it has been so hugely successful. Well, now we've come up with the newslog, and the newslog is kind of retro marketing. Who reads newspapers these days? But when people get it in the mail, they read it, and it works very well. Another one is what we call the book-a-log. Now, let's see. The book-a-log looks like a book, feels like a book, but it's not a book. Especially for many people participating in this webinar, the book-a-log is really great because not only will it give you the investment shareholders that you want, but the book-a-log positions you as the expert in your sector, and it's very powerful. Then we have three-dimensional. This is when you're going to really high-end people in a limited mailing. They usually give you 10, 15, 20% response rates, and are a powerful form of marketing. Now, one of the newest pieces of marketing is called a video log. And a video log, I'm going to show it to you. I'm going to demonstrate it for you because it's kind of hard. Assume that with a video log, you get an envelope in the mail. And you open it up, and there's a cover letter to it, and there's this piece. And this piece is pretty thin. It can be thinner than this, actually. And with this piece, basically what happens is everybody's going to open it up. So they open it up, and what plays is a video. So it's an integration of video and direct mail. And it's very powerful. And they're going to watch that 3-minute, that 30-minute, whatever it might be, they're going to watch that video and make a decision. Now, let's say they said, wow, I want to make that investment. Then what they do, the newest strategy is they come up and they push the button. You know what happens when they push the button? It makes a phone call. It makes a phone call to whoever's going to take that investment. And it's a very powerful strategy and technique. So right now it's pretty expensive. Investors, we have in fact a major bank who's taking a look at doing it to top executives for a very expensive product that they have. Then what about the other media? Well, you know, there's billboards and display ads in magazines and TV and radio and social media and paid search, and all that might have some place, but probably won't work. It certainly won't work as well. And, you know, we won't go into detail, but if you got questions about that, Caleb would be glad to explain more detail why. Now, what about the copy? Whether it's the banner ads or direct mail or landing page, the copy is the most important thing to get an investor to respond. So you don't want journalistic copy, you don't want editorial copy, you don't want traditional advertising copy. You got to have what's called direct response copy. It makes the mega difference whether it's online or hard copy. It's persuasive word engineering at the best. And what is it? Well, M squared is basically this, myopic marketing. Most people in a company are too close to the product. Direct response marketing takes you away from looking at the company and looking at the investor from their perspective. So the starting point is knowing who is on these mailing lists and then writing to them and having one clear theme, being very specific, being very conversational, having this you orientation. You'll discover, you'll learn, be extremely easy to read, have a lot of drama and surprise, and then really is 8.5 or less on the Flesch Kincaid score to make something successful. And always, you take the features and turn them into benefits. For example, an investment software provides real-time market data and analysis, but the benefit is you'll have immediate access to the same in-depth information as a professional trader. But the ultimate benefit, pinpoint your next big profit opportunity with the same tools that Wall Street traders have at a fraction of the cost. When you take the feature, turn the benefit, you're going to get much higher response. And then there's the offer, and it's critical with the offer to take this and make sure what you do is powerful. Offers should always be about the investor, not about the company. And the subject of any marketing piece is the investor. This is one of the biggest ways to improve your gathering of shareholders. And making sure that you do this right with editorial premiums, other types of premiums, and a powerful, powerful call to action. For example, premiums. Like this is the ultimate guide to profitably investing in real estate loans. So you'd be able to want to have this guide if you're thinking about that investment offer. And here's one of the great things. With the Jobs Act, you're not constrained with what you can do with the shareholders like you are with a public company. In a private company soliciting investors, you can think outside the box. This is an example with a client where they had VIP access to New York Times, New York Square party, to Coachella, to a red carpet that's at a Hollywood premiere, a variety of different things if you were to become an investor. Real Water, in generating investment shareholders, they sent out a packet of their ionized water, and so it's we've got one Jobs Act campaign we're working on now that deals with transformation of waste, and their byproduct is creating great fertilizer, and so we're going to have fertilizer for the investors. What can be done? That's one of the creative things that we work on to come up with the most powerful offer that we can think of, to be able to try to get that investor to raise their hands. What you want to do is, some people are going to respond immediately. They want to make that investment. Others are going to want your investment kit that would have several premiums and also be able to tell them additional information about what they get if they become an investor. And then you always want to have a strong call to action, telling them what you want to do. Online, for example, just saying download your free report now versus click here for a free report. Which one won by 56.76%? Download your free report now. So it's every call to action, and all the other things we do is based upon the history. Caleb, do you want to explain about the keys to success in testing?
Of course. We test everything, as exampled from the direct mail piece that you saw earlier with the two different headlines. We always test the call to actions as well. A call to action with a test A could average us a 0.55, and version B with a 0.63. We would have never known that unless we had tested. So if we test the first campaign, we see which version or which messaging works best to the different lists. And then we see which list performs better than what list. Then we can optimize for a second round of marketing. So we increase your response rate and ultimately increasing your conversion rate or your return on investment. So without testing, we're blindly throwing money at the wall to see what sticks. This is a way that we can scientifically test different audiences and different messaging to see which community of investors is best for your offer.
And then, of course, once you do your testing and your marketing, what do you do with all the people who come in and say, I'm interested in making that investment? How do you convert them? Well, like I said, some people want to make an immediate investment, but some need to be coached into investing. And probably one of the biggest downfalls of a Jobs Act campaign would be in this section, where you absolutely have to have a conversion series. That's an integration of email, direct mail, Facebook, banner ads to the people who have asked for your kit. They asked for your investor kit. Caleb, what would you say to somebody about the need for having this conversion series?
A conversion series is very important. So after you make contact with one of your investor prospects, this is mainly for the 506C, because if your minimum investment is $25,000 or $50,000, that investor is very important. So once you make contact with them, or once they raise their hand or requesting more information, you want to keep them engaged. So we put together this series that goes back to the prospect, reminding them of your offer, giving them some kind of incentive to call you again, and helps you and assists you in your actual close of that investor prospect.
And once you work on that, you've got the leads coming in. You get a certain overall response rate, certain number of leads. You know what that cost per lead is. And so from that, you're able to see the success of the campaign. And then you take a look at the bottom line and the conversion of those leads. What's going to be your conversions? Is it going to be 5%? Is it going to be 7%, 9%? So much of that depends upon that conversion series, the follow-up kit, and of course, the person who's either taking the call. And so what we like to do with our clients is we recommend people to take those calls, and we have recommendations for you on that. And we integrate it with a platform where they can make an immediate investment as well. So it's a whole campaign that we put together that's comprehensive and does its best in getting that ultimate conversion. So, Caleb, I think that pretty much covered everything as an overview, and we'd be glad to talk to anybody on this webinar about how we do this, how to identify and get that email list and postal list and Facebook and Google perfect investor for what you have, how to create the marketing materials, how to be able to do all this. Because as an agency, we have a team of people here, experienced not just investment marketing, but how to be able to make sure your campaign's done fast, on time, done with high quality, and everything's done perfectly well. And we have offices in Nashville. We have offices out in the California area, Torrance, California. And Caleb, any last thoughts? And then we'll take any questions that people have. And remember,
I'd be happy to help anybody with thinking through what filing would be best for you, with your marketing strategy, with what platform would be most appropriate for you to list on. Just about any question that you have, I'm happy to help. You can reach me at the email or number on your screen, and let's set an appointment, and I'd be happy to talk.
Great. And, on your screen is the 16 Secrets to Raising Capital. If you don't have that yet, it's an absolute essential guidebook. We are just done with updating it. And so it's got all the new current information in it. And then we can also send you a hard copy or online entrepreneurship that goes over everything you need to know about marketing under the Jobs Act. And we end up today, just a couple of things. One person has asked, what is the cost of the list? The list will depend upon a lot of variables. If you have your own list for modeling, what type of segmentation we want. So best to talk to Caleb about that, and we can pinpoint everything you need for that. Someone else had asked, what's the minimum investors can invest? Caleb, what's your answer on the minimum these investors can invest and the maximum, I guess?
Yeah, you can set your own minimum. So with some of the processing fees under the Reg A Plus, typically doesn't make much sense to have a minimum less than $500. $500 is a low barrier to entry, so typically we'll see people invest between $2,500 and $5,000. I think the average investment comes in around $4,000, I'd say, most of the time. But you don't need to spend. But again, the processing and transaction fees make it difficult to justify taking anybody that wants to put in less than $500.
Yeah, and I probably my recommendation. I'd have to see what the project is. My recommendation would probably be to have a minimum of $2,500 or maybe $5,000, and you're not going to have people objecting to that figure. I have many clients we've worked with that have minimums of $25,000 or $50,000. That's a little bit harder ask, but it's not impossible. But the lower rate matches up with the experience most investors have when they start off with investment. Because remember, what's going to happen if they invest $2,500, they're just kind of testing you and seeing what it's like. Once they learn and have a comfort level, you could get a check for 25, 50, 100,000, 200,000. I had one client that a while back at $500,000. So the upsell is always there. So I hope this has been helpful. We'd be glad to guide and answer any questions you have about using this new form of crowdfunding. We're specialists in it, and we could walk you through the whole process or answer any of the questions you have. So thanks so much for joining us, and we'll keep you informed of what's going on. Watch your email. You'll see about having a link for this. All right. Thanks so much.
Thank you. Take care.